My name is Matteo Spinosa. I'm the founder of Doefin, and I'm here to tell you a little story about what we are doing, but also what is going on behind the scenes of Bitcoin and in Bitcoin mining. I want to start with a quote that popped up in my LinkedIn this week. It's a quote from Warren Buffett, who said, "Risk comes from not knowing what you're doing." This sounds like a common and basic principle in any business. However, believe it or not, more than 1 million Bitcoin miners, from the smallest to the largest, are facing the same problem. They don't have any visibility about the revenues beyond 2 weeks. Let's have a look at some numbers. In the past year, Bitcoin price increased by now more than 50%, but the revenues only by 5%. And if you look at the volatility of these revenues, they were twice as volatile as S&P 500 in Bitcoin. In dollar, they've been more than 3 times more volatile than S&P 500. And this is why many investment analysts believe that compare Bitcoin mining to gambling rather than infrastructure, which is quite weird because miners are the engine powering a $2 trillion commodity, which is Bitcoin. The reason why this is happening is very specific to Bitcoin and is due to a feature called network difficulty. Bitcoin mining is a zero-sum game. Imagine the total Bitcoin rewards to be a pie, and miners are competing to get a slice of this pie. As competition increases, becomes harder and more difficult to get that slice, more expensive. The revenues reduce. So now think that revenues are volatile, they are variable, but costs are fixed. This means that the impact on profitability is even larger. On average, a 10% difficulty increase, lower profitability of miners by 15%. Now, I hope the problem is clear. How can you value, invest, or lend into a business when you don't know how much money they're going to make it, when they're going to make it, and the certainty of cash flow? You cannot. This is why miners are undervalued and unbankable. There has been no way to hedge Bitcoin difficulty and stabilize profits until 1 month ago. We launched Doefin, which is a decentralized platform offering options on Bitcoin difficulty. A miner pays a premium to receive a payout when difficulty is above a certain level. Basically, is offsetting the lower revenues with the option payout. Our options are fully collateralized, so there is no counterparty credit risk. We leverage security of Bitcoin using a trustless oracle, which means that you cannot manipulate settlement and maturity. And we have no jurisdictional constraints. As long as you're not in a sanctioned country, you can connect your wallet and trade. The benefits for users are clear. Bitcoin miners can finally stabilize their revenues, protect profitability, and institutionalize their business, becoming valuable and investable. Crypto funds and Bitcoin holders can now generate yield by earning a premium when they sell protection to miners. And traders have now access to hash rate volatility as a new asset class, and they can profit and speculate. We are a platform, so we make money by charging a percentage of the notional traded on our platform. We are not just an idea. We raised already $1 million in pre-seed funding from influential angel investors, and we had our soft launch in March this year, when the first on-chain transaction difficulty was executed between Power-E, a miner that wanted to hedge the operations of their mining operations in Paraguay, and the trading desk of Luxor, which is one of the largest mining pools in the world. Already in the first 30 days from launch, we got inbounds and outreach with 20 miners. We priced options to hedge 3% of the global Bitcoin network hash rate. We got 2 large crypto asset managers reaching out to us asking for ideas and solutions to generate income for their Bitcoin income fund. And we got the CEO of a Canadian miner as an investor. And something I'm very excited about is we will be soon launching also on a Bitcoin native sidechain. We are now raising $2 million. 10% of it has already been committed from existing investors. Most of the money will be spent in R&D and tech development. Is VI safe with a £10 million or $12.5 million cap valuation. I would like to tell you more about myself and my outstanding team. I spent 20 years in banking, but I think I'm run out of time. So if you want to contact me, these are my details, and you can invite me for a drink later this evening. Thank you. And thank you Boston, QUBIC teams.